Welcome back. We are listening to Real Estate Radio San Antonio on KLUP. That's realestateradiosa.com. And if, like we mentioned earlier in the show, if you would just text us at 210-708-3152 and give us some questions or your comments on what you look for when you hire a realtor. What's important to you? And we'll have some guests next week from Caldwell Banker.
Caldwell Banker, Craig and Libby Ross from Caldwell Banker.
And they're going to be on, And so anyway, we're going to share those thoughts that you've given us with our realtors. And right now we're into mortgage manners. It's Karla Hester, NMLS number of 219059. Stan Hester, 956893, NMLS number. We're talking about the top factors that determine someone to get a loan. And what are some of the most important things, Dan?
Well, I mean, if we have to pick one out, it's probably what's referred to in the lingo of DTI that you might hear, and that's the debt-to-income ratio, which is a factor of totaling the total house payment along with the rest of your applicable payments, and then applying that towards your total income. And that's amount that has to meet certain standards. Different loans have different numbers, can be 41% or 43%, can be 50%. That goes up and down. Those are some of the things that we talk about when we sit down and counsel a client, so that they know how much that they can afford, because you might like a house at a certain amount, but if it doesn't fit into your budget, and quite honestly, one of the things that we're very passionate about is making sure that the home that you purchase fits into your budget. We want to talk to you a little bit about that and make sure this is a big commitment, that when you purchase that home, you're not overextending, and you're not, getting something that you're missing, something that you could actually afford and move forward with. So I know that's one of your passions, Karla, is counseling with people and making sure that you know exactly what they want and creating the best scenario for them.
Well, yes. And, the debt to income, DTI is debt to income. So we take all of your debt that's pulled on your credit report, and that means installments, revolving credit, things like that. We're not calculating your gas or electric payment. We're just talking about things that populate over in your credit report. When we pull that credit report, your debt to income, any installments, revolving credit that you have on there, home equity lines, mortgages, and then your new mortgage, and then divide that by your income, your monthly income, and that's how you get your debt to income.
Another thing, a big factor on determine if someone gets a loan is naturally their income. How much you make? Is it what we refer to as W-2? Is it a weekly or a monthly paycheck? Is it commission? How much is that? How stable has it been? If you're self-employed or you're a commission person, most of the lending institutions want to see 2 years of past history of how much you've made to qualify for that. So, we have people that sit down with us that are thinking about changing to a commission job and want to know if that'll affect them. Absolutely, it will in some aspect. And so we want to sit down with those and look at those type of things with you, because income is very important, and how stable. That's what the lender looks for. How stable are you with your income? How long have you been on that job? Job length is very important, and the longer you have that stable income, the better you look to a lender.
Mm-hmm. Well, and the other factor is credit. So we haven't talked about credit. Credit's a big deal, and you could have a low DTI and a 20-year history on a job, but if your credit score is 500, we've got some work to do on that credit side. So credit is so important. Pay your bills on time and establish credit. So sometimes people think having zero credit card debt and have everything paid off. You really need to have some lines of credit in order to have credit.
Yeah.
So I'm not saying overextend. And if you have a credit card, I say use it and pay it off.
Yeah, and speaking of credit score, we've got on the second half of our segment, we've got Eddie Johansson from the Credit Security Group coming on. He's talking about the true facts of the FICO score, and it's really interesting what he does and how he looks at it. Totally different than most of the credit repair people that are out there. But he looks at and explains exactly how that FICO score actually works. But
It's very misleading sometimes. Sometimes you think you have it figured out, and you don't. So you want to get with an expert and just review it and find out if you're in the right place. If there's something you can do to improve it before you get to the point where you want to go out and buy, and now you can't because we got to work on your credit. So, and the other thing that I always say on income, if you're self-employed and we're coming towards the end of the year, it's always good. We can do an analysis of your self-employed income over the last 2 years and find out where you are in your self-employment in terms of, I know we all write expenses off, and that takes away from the bottom line. So I love sitting down with self-employed people and going through your tax returns and determining where you need to be to buy that new house next year. So
that's real important as we talk about those things. That what can I do to improve my chances, to make sure that I don't get denied on that loan, and I want to purchase that home. So many people ask us that, what can I do to prepare myself? And one of those big things that buyers' finances should be, you need to organize your finances. It's very, very important that you have everything documented and in line, so you could start doing that at this time. If you're thinking about buying a home, start putting things together. If you can pay your credit cards down to 30% or less, you certainly can. There's just a lot of things that can be done, and we're going to touch base with those in just a moment here.
If you're just tuning in to Real Estate Radio San Antonio, you're listening to Real Estate Radio San Antonio. We're talking about mortgage matters. And if you would just text us, 210-708-3152, and that's 210-708-3152, any questions that you might have for us, or any ideas, or any how you would choose a real estate agent. So thank you for listening.
Back to how you get ready for that loan. One of the things that we do want to talk about is we look at people, and we look at people's credit. And one of the things that you want to make sure on your credit report when you get that, and you can apply for that free on different sites throughout the websites and get your credit report. But one of the things you want to make sure is that you don't have any tax liens, that you don't have any unsatisfied judgments or any other public records on your credit report. You also want to make sure that you remove all the disputes. That's one of the biggest things we have in here. People say, dispute this item, dispute this will bring your credit score up. You cannot get the lenders that we deal with, the financial institutions that we work with, they will not accept disputes on the majority of all of the trade lines that you have. So you'll need to get with someone and have them look at if you've got disputes and get those removed. And those are things that can be helped with credit people.
Well, I think that our credit guy is going to talk about it, but I mean, to get your best credit in terms of revolving credit is keeping your debt under 25% of your limit. So whatever if you have $1,000 credit card, don't carry a balance over 300, and or actually 250 would be better, and that'll keep your scores a little bit better. Than once you start charging your credit card up to closer to that limit, then your scores are going to drop.
We're getting ready to turn it over to Tim here in just a moment, but there's one thing I do want to say, Karla, that one of the biggest things that we sit in front of people and kind of ruins it for them on their debt to income ratio is they have purchased a new vehicle, and that new vehicle will come with a $600, $700, or $800 payment, and now all of a sudden, because of that high payment, they cannot get a house. And I mean, I've literally sat with people that are so upset, sick to their stomach because they've purchased that vehicle. Just think about it. If you're getting to buy a house, or that you're wanting to buy a house, you better realize what your debt ratio is. Get with somebody before you go out and you purchase those items, that boat, that car, because that's going to hold you for 5 or 6 years possibly from getting that home.
Oh yeah, that's a good point. That's a great point, Stan. I think that we're going to turn it over. We're going to take a quick station break. We'll be back with more Mortgage Matters and great information from Tim Miller. You're listening to Real Estate Radio San Antonio, Karla and Stan on KLUP.